All right, welcome everybody to our next weekly outlook. So this week we have quite an easy session when it comes to economic data, which we'll jump into in just a quick second here. But we're going to go over the macro fundamentals as always, and then go ahead and move on to the technical side with Stefanos.
What's going on, guys? Hope everyone had a great weekend. Looking forward to breaking down the charts and doing all this with you guys again. It's always a highlight of the week.
Absolutely, for me as well. So we know obviously that we have the geopolitical tensions still going on. The talks are still going on between the two countries, but there's still a lot of tensions where there's the military that's still not backing out of Ukraine. If anything, they're kind of just still moving in. And then there were also talks around China kind of being on the side of Russia and helping them out. Last week, we saw that Biden also met with the Chinese president, and they were talking about pretty much what Biden did was warn Chinese president that, hey, don't get involved in this. But obviously, we can tell that the geopolitical tensions are still there. So what I want to do instead is go over two main articles that are outside of Russia and Ukraine that we need to be watching out for this week and then the next couple of weeks as well, because right now we're starting to see a little bit of more updates when it comes to interest rate hikes. And then obviously we have the oil increasing as well, right? The oil prices are still increasing. And then also what's happening with Biden and the Russian cyber attack that he just mentioned recently. So the very first thing that I want to go over is that today Powell was speaking. So he is pretty much putting out the sentiment that he is still ready to back the half-point hike in May if it's necessary. So in the interest rates that came out last week, we saw that the Federal Reserve was putting out the sentiment that we're going to have about 6 interest rate hikes this week. And it seems like they're still holding on to that sentiment. So we did have a half a percentage point hike last meeting. And it seems like when the following meeting comes, then there is a potential for another half percentage point hike. So he's saying that he's coming in with a little bit of more aggressive tone. And this is all to help with that inflation, which is being caused by obviously higher prices when it comes to oil prices, and then the geopolitical tensions anyways. And so those are key components that they have mentioned in their FOMC statement as well. When you open up the FOMC statement in the first couple of paragraphs, I believe it was the second paragraph, we did a live stream together on that day. And I believe it was the second paragraph where they literally mentioned that the inflation is also coming from the war with Russia and Ukraine, and how they believed that was going to continue contributing to inflation. So they said it's better to increase the interest rates right now instead of waiting to see what those consequences are going to look like and then having to deal with inflation and then finally doing something about it. He said, if we already know it's going to happen, then why not take care of it right now? So that's one sentiment that is being put out. And obviously, just because you have interest rate hikes does not mean that automatically it's a great thing for the economy. You want to pay attention to what's the economic state, and you also want to pay attention to whether or not the consumers are comfortable with those interest rate hikes. So you could continue increasing interest rates. After a certain point, it becomes very uncomfortable for the economy and very uncomfortable for the consumers, even though it might be a good thing for the investors, right? So that's when you need to kind of pull back on that contractionary monetary policies and kind of shift a little bit more into accommodative stance, right? So right now we're in an accommodative stance. For the last 2 years, we've had near zero interest rates, and now we're starting to increase the interest rates a little by little, but we still have mixed economic data when it comes to the labor market, when it comes to the consumer sentiment, when it comes to, obviously, inflation we know is super high, but when it comes to a lot of different aspects of the economy. So what we're doing pretty much is we're putting out the sentiment and we're increasing interest rates by half percentage points. And then we want to see how the economy is going to react to it. And at what point are consumers comfortable with the high interest rates? And at what point can we continue growing the economy before hitting a point where the consumers completely stop spending money, where they completely stop going for loans and all that type of stuff? And that is going to stall out your economy. And then we have Biden sees risk of Russian cyber attack on US as sanctions bite. So obviously we've seen that a lot of countries overall have increased sanctions on Russia. Russia has responded back to that as well in their own way. But it seems like now we have some news about President Joe Biden coming out and warning that there are indications of possible Russian cyber attacks. Clearly plays right into that geopolitical tensions that we have been looking at for the past, almost a month now. And so, you want to think about how does that affect your decision making as an investor, and then what would you be doing? So clearly, as geopolitical tensions rise, we have been talking about how the investors immediately move into safe haven currencies and commodities, and we're going to go over that on the technical side, but I want you guys to also kind of correlate how these fundamentals play right into the strength that we're seeing in the safe haven currencies and commodities like the yen and gold, what we usually look at anyways. So you guys can go through these articles on your own and kind of go through the details, but I want to give you quick summaries to prepare you for the week. Now, going on to the economic calendar side for this week, started off quite easy. Like I said, there's not much coming out this week. Anyways, we had Powell speaking, and that's the first article that we went over. He was giving us an economic outlook, which is pretty much that he thinks the economy is still ready for another half percentage point hike in the next meeting in May. So that's the sentiment that we're kind of leading towards in the next couple of months or so. Now, going into Asian session, there's legit nothing coming out besides the RBA governor speaking. But again, unless you're trading the Australian dollar, there's really no economic data for you to trade in Asian session. And then going into London, again, not much coming out, or even in New York. So tomorrow is going to be a purely technical move if you're trading Asian or London or even New York. You want to wait for that volume to kick in at the market open. But other than that, there's no economic data for you to trade. And then things start to pick up on Wednesday when in London session, you get CPI, PPI, and RPI coming out from the UK. And so this is inflation from all three perspectives of the economy: consumer, producers, and the retail side. So you guys get to see the entire picture pretty much at once. So that would be a good fundamental to trade if you're trading London. And then going into New York, you have Governor Bailey speaking and Powell speaking. So I do expect to see a lot of volatility as soon as the market opens up on Wednesday. And hopefully we're going to be trading live on YouTube. So, if you guys can join in, and then we're going to break down all those trade opportunities and then hopefully catch a few during that time as well. And then after that, quite an easy rest of the session. And then in the Asian session, you have the monetary policy meeting minutes, but that usually doesn't create a lot of volatility in the market. So that's not really something that you have to worry about. Going into Thursday, then you have the German flash services PMI and the manufacturing PMI. So those are a couple of the important fundamentals in London session. And then after that, you have the UK flash manufacturing and services PMI coming out, so about an hour away from each other. Right when the New York session opens up, then you have unemployment claims as usual, and then you also have the flash manufacturing and services PMI coming out from the US. So after that, things die down on Friday, and there's, again, not much coming out for you guys to kind of trade when it comes to economic data. So it's quite an easy session quite an easy week after a very fundamental heavy week last week, and economic data and macro fundamental heavy week last week. So pretty much this week, you only want to be trading right when the market opens up, market overlaps, and also any technical setups that you see. There's not much from the economic data side.
Absolutely. All right.
Go for it.
Get into the technicals. So right now, as you guys know, I normally break down with I like to call it a skeleton, with the higher time frames marked off with the multi-year downtrend here on GJ. We have our lows created during the 2008 market crash. Now, if you guys want, what I did with my group this morning, if you guys go onto YouTube and search Forex Trading Live under my YouTube name, today's date, I did a full history on GJ. In the beginning of this, you could go around like 20, I would say minute 20. I did a full fundamental and technical breakdown, but it was a full history of GJ and why it's where it's at right now, breaking down almost each candle and each, if you take a look at GJ over here, like, as you guys know, this was from Brexit. This is from the 2008 market crash over here. And then obviously we had COVID over here, but breaking it down more specifically, if you guys want to take a look at that, that might help you guys out as well. Get a nice little refresher on GJ and understand the history of it fundamentally. But looking over here, some of these levels that I did mark off, as a lot of you guys are familiar with, a lot of you guys are regulars and watch us on a weekly basis. You guys see that we've been stuck between 156 and 149. Previous candle body highs over here to the left. And again, it took us almost the whole year in 2020 to reach 156 up here, retesting the previous highs. All right. So once we did that, we ended up retracing. We had the rumors that we were going to increase interest rates. So we pushed all the way up to 158. They didn't increase rates, which pushed us all the way back down to 149. And then we had that surprise move in December where they actually did increase rates, bringing us right back up to 158. Then we had I think two or three rate hikes, which, as you can see, this was our move over here. Before this bullish move happened, this bottom wick was created by the fear in the market from the Russia-Ukraine tension, right? So that brought us all the way back down. We created a top wick up here, flipped bearish, passed the low of this wick over here, and came all the way back down into this area, looking like we could potentially drop down into 149 again and tap that area again. But what we did was we tapped into a key area and a trend that we've been following since the beginning of COVID. We tapped into that key area. We also broke the multi-year downtrend over here, where now we're holding a support above that trend, and now we're starting to retest that area and continue bullish here. So the question is, on the higher time frames, are we going to end up breaking 158 and continuing up after the rate hike? And again, less fear in the market. And where are we going to go after that? So I'll break that down on the weekly as far as our next target. But first, we need to see where we're going to go as far as, retesting 158. Before there, we got to see if there's any pit stops before we reach that level. All right, looking at the weekly now, we have a couple levels that we ended up retesting and breaking through. And one of them is 151 down here. Let me just change this. And we'll mark this off. There you go. So 151 was definitely a critical area where we held a previous resistance, support, resistance, or support, and then resistance again. We ended up tapping into that level. After this candle ended up flipping back below 153 over here, which we'll mark off as well. So as you can see, this little gap in the market over here, it looked like we were holding support at 153 over here where we opened, and we were starting to push up, holding support and continuing up. But that's when Russia actually invaded Ukraine. We flipped bearish, closed below 153. This candle ended up creating a top wick, passing the low of this candle, and it looked like we were continuing down, but we actually ended up holding that support at 151, closing bullish. This candle created like a very small bottom wick over here, past the high of that wick to be filled, and then we just started skyrocketing up off the rumors that they were going to increase rates, and then they actually did. So that pushed us all the way back up to a critical level of 157, which is obviously above 156, that monthly level that we finally broke back above. So now we got a strong close above that level.
If I may add, before you drop down to the next time frame, is that even in that gap down, when price pushed up and then pretty much grabbed liquidity, pushed right back down, you guys still want to pay attention to why did it specifically close in that 153 and 151 area. Look at exactly what happened to the left of that. There's a ton of consolidation in that area. That's your clear liquidity grab, as the following candle, which made a bottom wick right into that support of 151 and then pushed up. And the way to know that, okay, this is a liquidity zone is because look at how the candle closed last week. Barely a bottom wick, barely a top wick, but a ton of bullish volume.
Ton of bullish volume. And look how it closed too. And now, as you can see, that we just started the week. So it looks like we already created this bottom wick, already passed the high of that candle. Now we should be heading up. And as you can see, we'll check out the daily right now too. You'll see that the daily this morning ended up creating this bottom wick, as we predicted this morning on that live stream I was telling you about, ended up flipping bullish and closing above 157. So now, as you can see, we ended up kind of closing above these candle body highs to the left, where these candle bodies closed and opened. This candle ended up closing above that level. This candle created a bottom wick, held support here. Are we going to pass the high of that candle and continue up? I personally just kind of grabbed, once this candle flipped bullish, I grabbed this move. So I grabbed about 14 pips, stop losses at break even, secured most of it, but we could very well be continuing right back out to 158 from here and continue up. You do have a couple wicks in this area over here, so you just got to be aware of this area. But on the lower time frames, it does look pretty good.
What you do want to see here, based off of what we just saw on the weekly and the daily, is that you've seen nice push up that 157 area that I think last week or the week before, that's the area that we were targeting as like a final TP if price does break above 156 and hold on to it. Now that you're breaking above that resistance, you at the very minimum want to see some sort of break and retest here at a very minimum 4-hour, 1-hour time frame, because you've had a massive push up from basically 151 up to 157.
Absolutely. Now, the one thing that you do want to never do is marry your bias, right? Where we see the bias, you can't go wrong by taking a buy. That's not really true, because as you can see how overextended this move is, we had a little delay right here, but as you can see how strong this daily candle is, and then you have this candle getting a little bit weaker with a long bottom wick right here. So if this candle closes weak over here, we end up rejecting this level over here to the left, right over here as well. We could very well continue right back down into this area and then continue back up, right? So just be aware of that. I don't think that's going to happen, but it very well could. The only reason I don't think it could happen is because of the weekly, and the way the weekly has already created that bottom wick and flipped bullish to pass the high over here. But as you can see to the left, the last time we tapped into this whole range between 157 and 158, you've had all these rejections. So we could very well, push up and then, tank a little bit if we get some more fear in the market or anything like that.
Yeah, so these two candles are pretty much the same, right? Where you had liquidity grabs and push up. So basically, just to kind of reiterate what you're saying, is that with this, so with this week, we could end up just copying this, which is 157 and going down. What we're basically saying is know the limitation of your trade. Yeah, you broke above 157, but that doesn't mean that now you head up to the moon, right? You need to know the limitations of your trade, where we have seen price hold on to 158 for a very long time, reject it, and then continue back down.
Absolutely. So looking over here, we already did the daily, and now looking at the 4-hour. 4-hour so far is holding that support. We've been pushing up, respecting this trend over here. I should bring that a little bit tighter. We kind of have a channel if you want to draw a channel, but I don't really like having channels on my chart. But right over here, we are respecting this area. Resistance, support of the channel. Right now, we are holding a support so far, as we've just retested the previous highs over here to the left, just like we did this morning, right? There was a nice buy that we grabbed this morning where price ended up holding support over here and continuing right back up. I actually grabbed the sells right back down to here. It was about 32 pips, just based on the lower time frames and how it was setting up. But it just perfect liquidity grab, which we were talking about. Knew to take profit in this area. Price ended up holding support. You got a nice bullish candle close with a wick to fill. This candle just took off at 9 a.m. Past the high of that candle, push all the way up. Clean close above the previous resistance. This candle retested this previous resistance over here, held above that area. So far, we're creating a higher low with that wick right here, flipping bullish. So now is this 4-hour candle going to close kind of the way it is right here? And then the next one, could we expect, if it closes right here? Oh, sorry. If it closes like right here, passes the high over here and continues right back up. Right, so always kind of just try to predict where price is going to go based on all the higher time frames, lower time frames, and just have a prediction of where you think price could possibly go, but just don't marry it. Right. Looking to the left over here, where's our next area that we could be reaching? We have a resistance right up here. That could be our next pit stop. What's the price? 157,600, right? Or 640, 650, whatever you want to call it. Right. So as long as we hold this support, respect this support right here, we could very well be continuing right back up to that area. Looking at the 1 hour, perfect formation over here, right? And I don't know if I mentioned, but I did grab the buys over here as this candle closed, the 1 hour. And just like it happened this morning at 9 o'clock, this candle barely created a bottom wick, passed the high of that candle, and just took off to retest the highs up here, right? So nice 14, 15 pip move. Now we can expect, let's see if price is going to close above this level. We can always adjust this level as we go down the time frames, but we'll see if it closes above these candle body closes over here. Bottom wick forms on the next one, and then we possibly continue right back up. But we got a ton of bullish volume, perfect like dip buying, if you want to call it that, where price, you just get it at a key level over here and then take price back up. We get the support formed. We had a little resistance right over here that we ended up closing above with this candle. This candle just took off from there, stop loss below this candle, and let it just run. Looking at the 30-minute, now let's see if we end up respecting this level. Are we going to hold support at this level, nice clean support, to continue bullish? Or are we going to end up coming back into this area, consolidating a little bit, and then continuing up? Right now it's 748. This candle looks like it's creating a bottom wick and starting to flip bullish. We're still in the middle of the 30-minute candle. So could this candle be creating the bottom wick now and then continuing up? Let me look at the 4 hour. So the 4 hour, I'd rather see a bullish close above this level right here. So wait for a bullish close above this level before you take price right back up. And then first, you also got to see how much range you have from this level here to here. You only got about 15 pips. So do you want to use that? Do you want to take that during an Asian session? For me, I would lower my risk if I'm going to take that. But I do think that this was the move. And that if you miss this, you know, maybe not get into too much earlier or too much later. You know, don't get that FOMO to take price right back up here. As long as you get that close above there, maybe. But other than that, don't try to get the impulse entry or anything like that, because you could very well reject this level over here, right? Fake out, and then we come right back into this range. You don't have that New York volume right now. You only have Asian, and it's just starting to form for the next day. Make sense?
Got it.
All right. Lost my breath there. All right. So again, we got the skeleton for gold. We have this multi-year bullish trend over here that we've been respecting multiple times. Really got that hard bounce in February with the fear in the market from COVID. But we have 16, or not from COVID, from Russia, Ukraine. You have 1680 that was held, double bottom on the daily, retested with a very nice NFP over here back in August. And price ended up holding support here at 1750, right? Now we were bouncing between 1750 and 1830, where we originally ended up holding this resistance over here. We failed to close above that level multiple times on the monthly. This month ended up rejecting, getting like a fake out on the lower time frames. This candle closed right at that level. This candle, again, another fake out, pushed above, and then ended up closing below. And then again, Russia, Ukraine. Russia invaded, a lot of fear in the market, pushes all the way back up to all-time highs of 2075, right? So now looking at the current monthly candle, which we filled the previous wick of the previous candle, now we're tracing. Anytime you reach all-time highs like that, you got to expect some kind of profit taking, some kind of, you know, buyers take profit, sellers take over, and we retrace all the way back down to this area, which is pretty interesting. Is this month end up flipping bearish, continuing below? What level is this? I have 1910 marked off. Previous candle body highs over here to the left. Are we going to end up closing below that level and flipping bearish, or are we going to close bullish and then continue back up and fill that wick? But again, that's a very big upper wick with a very small body. So could we be creating a top wick on the next candle?
You also want to remember that this month is the last month of the first quarter of this year. So obviously, you know, there's going to be profit taking, and you definitely want to see how price is reacting to some of these higher time frame levels as prices are retracing. So now this is when technical analysis becomes very important. The details that Stefanos is pointing out, those are the type of things that you want to be watching out for the entire week.
100%. Looking at the weekly, now the weekly got some nice candle bodies as far as the formations go. Like you got this all-time highs that were retested. Candle closed a very weak candle, very weak bullish candle, but above 1975, which are these previous candle body highs to the left. You have this candle created a very small top wick, passed the low of this candle, came all the way back into 1910, previous resistance over here to the left, right? So we ended up rejecting that level. We came below it, but closed above. This candle, could we be holding a support in this area and continuing to drive up? Now, again, Powell just announced that he was going to be looking at increasing rates by 50 basis points next meeting. So again, that's very bearish on
25.
gold. What's up?
25, right?
He didn't say 50 in that article?
Let me check again.
Yeah, I
Yeah,
think
you're right. Half percentage point.
he was open to that or something like that.
Yeah.
Not that they're going to be doing it, but you
They're
know,
open to it, yeah.
so if that's the case, that increases the strength of the dollar. Gold dollar is gonna take a little fall over there. So we'll see if that ends up happening. But so far we are holding a support here. Now we need to take a look at the lower time frames. And let's go back to GJ real quick. GJ is now passing the high of these candles over here and continuing up. So if you grab this move, you leave a runner. Hopefully we could end up reaching 157,650.
That's what I'm grabbing. I just entered it with the stop loss right below the previous 15-minute.
Right here?
Yeah,
Nice.
around that area. And then pushing
Nice.
up to 157,650.
Awesome. So now if you guys pay attention to the time down here, 7:54, the 1 hour is going to close. So the 1 hour looks safe to close above this resistance over here. Expect at least a small bottom wick on the 1 hour to then continue up. So looking at the 30-minute, I don't like the 30-minute. The way this is over here with this long bottom wick. We'll see how this forms. We could very well continue bullish. But I'm gonna wait for this 15 minutes to close for me to re-enter, and then we could possibly take this out. Look at that go.
And it's also the Tokyo Stock Exchange open up, right? So that's where the volume comes in versus compared to like all the other sessions or all the other timings of the Asian session.
What you're saying, 8 p.m. Eastern Standard Time?
Yeah, that's the Tokyo Stock Exchange open.
100%. So going back to gold real quick. Now you have this complete correction after you had a consolidation right here. Price ended up rejecting, we pushed all the way up with the invasion. We came right back down into this range over here, but we knew that we were probably going to exit the range after price held support and respected this previous support. And then you got this candle right here closed with a wick to fill, which passed the high of the previous candle. This candle retested this area, flipped bullish, filled the wick, closed a very strong bullish candle. We ended up holding support at 1920, which is a critical level over here. With this candle right here, this candle created a bottom wick, passed the high of that one, and we just took off, right? But now you see that we ended up correcting the entire move back down. Again, they increased interest rates and there was less fear in the market, which brought us right back down to this level. But we are still holding support over here. The one level I would be paying attention to, one level that I pointed out last week, is this level right here that we ended up rejecting. Because right here, it looked like we had a possible dip buy where we could continue right back up with this candle and this candle here. We could continue right back up, right? But you got to be aware of this level right here. So we ended up rejecting, but we're still holding support with this bullish candle right here. So just based on the daily alone, can we get a bottom wick formed? I'll just draw it with the arrows. Bottom wick formed somewhere in this area, and then we continue right back up and then continue up from here, again, with more fear in the market, or are we going to end up just consolidating between here and here until the next meeting, and then we continue down? All right. Again, we're kind of consolidating in this area. This would have been a nice candle to grab once we broke above.
That's the one that I grabbed.
Beautiful. Yeah, we ended up holding a higher low right here. If you look to the left, previous key area. Ended up holding this area. I would stay out of this area, especially with this candle, indecision candle, past the low and the high of the previous candle over here. Make this black. Now, once this candle closed above that level, get the bottom wick formed. As soon as it flips bullish, that's where you enter.
That's
Right?
exactly how I did it too. But the way that I viewed this previous candle, 4-hour candle right here, was as a liquidity grab. So again, tapping into these areas, a bottom wick rejection, flip back up bullish and broke all the highs and closed right at the zone. And then wait for the following candle just to make a bottom wick. And then as it flips, that's an entry to the upside.
Absolutely. It's a strong candle with a wick to fill.
So anytime I see like a candle like this, even if it doesn't have a top wick, but as soon as it has that bottom wick and it breaks the highs of the previous candles, that type of setup, regardless of the time frame, always kind of works out because it tells you that there's volume that's about to kick in. Because, you know, same way that there was a ton of volume here with this little bottom wick rejection and then breaks the previous highs here and closes bullish.
Absolutely. Now I'm looking at this area right here. If you guys missed that move, right now you could be leaving a runner if you actually grab this move right here and grab, I don't know, good amount of pips, maybe 30, 40 pips. Now if you didn't grab that move, just be aware of this level right over here, and we'll look at it on the lower time frames. But I would say if you're looking for any kind of higher time frame buys, wait for this level to break. You got a clean move to the left, clean moves. This is exactly the range that you want to be in to trade. So that's what I would kind of be waiting for if you kind of miss this move, unless you get like some kind of a close here, little retest, and then price continues out. You could grab this move, leave a runner for this move right here. Looking at the 1 hour, the 1 hour is still like rejecting this area I was just talking about. We got a little fake out of that area as well. Again, you got wicks over here as well that ended up closing below that area. So you need a nice close above here before price continues bullish over here. So far we're still holding a support, right? But you need like a nice close above this level to then continue up and fill these wicks. And then you got to see if this would be worth taking all the way back up to our candle body highs over here. Looking at the 30-minute, we keep rejecting this level again. So I would just, again, wait for a break and retest of that level. These candles are very weak as far as like trying to come down. So I think we could just very well consolidate in here, get some volume. Price closes above this area with a very strong bullish candle, and then we continue up.
100%. And that plays right into the higher time frame levels that you were marking off. We are sitting at key levels, right? We just retraced back down from them. It's 9 days left until this quarter ends. There's a lot of, waiting for the next quarter to start. Think about, the fiscal years and all that type of stuff. Like four times a year, you're kind of readjusting your books and whatnot. So that's pretty much what's going on as you're sitting at these key levels and you have the important fundamentals coming out.
Amen. Well, yeah, I hope you guys have a great week. We'll be with you Wednesday, right?
Yes.
Yeah, so we'll be with you guys Wednesday, 7 a.m. Eastern Standard Time to break down the charts again, give you a little update of where price ended up going, and trade live with you. So I look forward to seeing you guys, and have a great week until then.
Yeah, and you guys know where to contact us if you guys have any questions. For me, Instagram at Sharmafx, for Stefano's FX28. And always feel free to reach out with any questions. If you want to go ahead and, a lot of people reach out to me for charts and stuff, like they have some questions about charts. Both of us are more than happy to help you guys out with that.
Amen.